It's getting complicated because unfortunately the pass-through from energy inflation to food and services is confirmed and very strong. I think the inflation readings this week have confirmed this. I do think that even if we go to lower steps, 25 basis points or so, we don't have any end in sight. So actually the ECB could hike way until the fall instead of being stuck, to hiking, I would say, just into March, right? So no, the picture is not very rosy. And to be fair, markets are not getting the memo. It's as if they were completely ignoring what central bankers have been saying over the past few months, unfortunately.
One of the wildcards that the ECB has been talking about here has been the role of fiscal policy, whether it works to undermine some of the tightening measures that they've been enacting around monetary policy. Is there a view that the timing is just wrong when it comes to the fiscal policy here in Europe?
This is the big decision of 2022 that, against the war against COVID, I think central banks and fiscal policymakers were all hands on deck. In 22, central banks decided to favor price stability for good reasons. And so ministers of finance had to do the heavy lifting. In Europe, they've spent more than 5 percentage points of GDP just in the last 9 months of 2022 to offset the cost of the war and to avoid that people go into social unrest mode all across Europe, right? So I think the ECB is right by pointing out the fact that some of the disinflationary pressures is limited by the fiscal put, but to a certain extent we're at war, and so I think it's just a question of domestic social stability for most of these economies. That's why price shields have been mushrooming across Europe, and somehow, yes, it doesn't help disinflate pressures, but remember, most of this inflation is supply side driven anyhow. So I think everybody should stay on their side. The ECB shouldn't give advice to the ministers of finance. The ministers of finance shouldn't give advice to the ECB. It's going to be a very tight and very political next 6 months because ministers of finance are going to say that the ECB is causing recession when they're doing everything to avoid it by spending even more than they should. And the ECB should not really get into what the fiscal policymakers are doing right now because they are trying to manage a bit the very difficult situation when it comes to electricity market redesign and of course the pass-through to food and all of the structural issues that have been weighing on the economy. Wage price spiral risk because of rigidities, concentration risk in the food sector and so forth. So I think everybody should do their job and not really going after each other to do their job better.
Ludovic, you said something very interesting, I think, in response to Karen. You said the markets are being complacent about the messaging that they're getting from central banks at this point. I think the market's problem at the moment is they're trying to figure out whether it's worth taking a modest capital loss on equities at the moment, because it all seems to depend on how deep the recession will be or otherwise. And it seems to me if you buy bonds today, you are locking in a capital loss even before you start to think about how much the yield is going to give you.
I mean, you're totally right. I think there are two answers to your very good comment. The first one is I think markets have difficulties understanding what data dependence means. For me, data dependence means that central banks are going to be too late and they're going to hike till we are into recession. For most equity market participants or fund managers, it means they're going to throw the towel much before we're going into recession territory. So you have a vast array of expectation that creates this rather weird beginning of the year with the excitement and the confidence effect from avoiding blackout in winter. We have markets that have been really, overexcited, I would say, and certainly underestimating how much central banks are ready to hike on both sides of the Atlantic. And the second topic, which is also, in your question is, I think we are also at a tipping point when it comes to the recession. I think markets now are looking much more at this fiscal put option. And so they see that recession is avoided because of the fiscal profligacy that is embedded in anything that we see being announced from all the governments. Germany growing 0.2% this year, France announcing 1%. This is because public spending has grown. So it's basically recession avoidance syndrome. And so I think markets are getting that memo very well. So that's why the bond market is a very interesting gauge of this because they are reacting, I would say, very differently from the equity market, but they're also showing that there is no risk to them. Look at what's happening in high yield. There is no fiscal sustainability risk that is priced in at all, which I think is a bit weird when you look at how much debt servicing cost has increased and you look at how much the interest rate shock has been over the past year. So the bond market for me are mispriced massively today.
Yeah, I was just about to ask you before I think we're on similar lines. Perhaps I'm going to go a little bit further than you. Good morning, Ludovic. Are we on the cusp of another Eurozone debt crisis?
Yeah, I don't think so. At least that's not my central scenario. But to be fair, I am expecting a little bit more discipline from budgets all across Europe, because they need to target some of the support, and they need to understand that they are in a very different financing environment. In my country, France, the debt service went from 31 billion in 2021 to 54 billion in 2022. This is a massive increase of the debt refinancing cost for a government, right? And we're not done with the energy crisis. We're not done with additional measures to offset the cost of inflation and the cost of living crisis on firms and on households. So I'm getting a bit concerned, I would say, because right now, Meloni, for example, in Italy has been very conservative with budget, but you saw what just happened in the reaccounting of some of the fiscal expenditures in Italy. So we are walking a tightrope here, and I think we can avoid to go into full crisis mode. And I think certainly the ECB is very committed to avoiding this. So we will not repeat 2012, but somehow we need to be cognizant of the change of environment. And the fiscal policy today is not cognizant of the change of environment, clearly.